Hi, everyone. All right, so I'm just going to give it a minute or so here to let everybody get logged in. I just want to say a quick thank you, of course, to everyone for coming out for our first webinar that we're hosting. So yeah, we'll just give it a couple of minutes. You guys can feel free to use the chat to talk to each other throughout the webinar. Okay. All right. I think we're ready to jump in. So here we go. Welcome, everyone. We are so excited to have you join us for our first webinar on decoding the global tax maze, and Canadian e-commerce business guide to navigating the international sales tax. Our guest today is Rūta from One Stop VAT. Thank you, Rūta, so much for joining us.
Hello, nice to see you.
Just a few little housekeeping items for everyone. So we're obviously aware that everyone has busy schedules and that your time is extremely valuable. So we have committed 45 minutes today for the webinar. And as we move through, we encourage all of you to ask any questions that arise using the Q&A feature in Zoom. It's at the bottom of the screen, right beside the chat setting or the chat feature. Once you can ask the questions in there, and Rūta will allow time to answer them after each topic, as well as during the last 15 minutes of our session, which we are dedicating to open floor Q&A discussion. At that time, part of the webinar, you'll be able to raise your hand, and this will be your opportunity to engage directly with the speaker, Rūta, or myself. So I'm just going to talk a little bit about who we are. So Rūta is a seasoned tax professional. She currently serving as the head of indirect taxes at One Stop VAT. She specializes in guiding businesses through both routine and intricate tax issues across Europe, the US, Canada, and Asia. Her expertise focuses on remote trade and digital commerce, including digital services and software as a service. Rūta's goal is to provide tailored solutions to help businesses navigate the complexities of taxation in a global scale. So welcome, Rūta. And of course, my name is JJ. I've been working with AIS Solutions in the e-commerce division for almost 3 years now. I started my career, though, in retail management in one of the largest malls in Ontario before switching my focus to the bookkeeping side of business. This has actually provided me a very unique insight into the systems and workflows of an e-commerce business. The flow of sales through POS systems and online marketplaces are very similar. I strive to educate our clients on the importance of understanding their financial reports so they can make better business decisions. One thing I have learned in this journey through my learning of e-commerce is that no matter what the size of the business, sales tax can be complicated and overwhelming. So we've just got a quick little poll that we're going to ask that you guys complete before we get started. The poll is to help us to understand who you are and what your international tax needs are. The poll has only 3 questions, so we've allowed 1 minute for everyone to get their answers in. Thanks, everyone. It's looking like we got a pretty good mix of between business owners and industry professionals. Okay. Okay, so let's see the results of the poll. So it seems we've got quite a few industry professionals here. Welcome, as well as business owners. a good mix of physical products and digital products that are being sold. And as I suspected, the majority of you sell in the US, although there are some with European Union, Australia, United Kingdom, and a few others as well. So that's great. I appreciate that. That really helps us get to know, who we need, where we need to focus for the webinar. Okay. So now I'm just going to talk a little bit about AIS Solutions. For those of you who don't know us, AIS Solutions is a cloud-based bookkeeping firm. We work with clients all over Canada and have over 20 years of experience. Our amazing team is focused on providing real-time financials to help business owners make accurate decisions and help them grow their businesses. The services we offer are monthly recurring bookkeeping, cleanups, Watch My Books program, conversions, training, and professional accounting and strategic planning services. Beyond the bookkeeping side of things, we are passionate about educating and empowering business owners. This is where the webinar comes into play. Some of you may know our CEO, Juliette, from her extensive involvement in the accounting and bookkeeping industry. And Juliette recognized early on the needs of the e-commerce clients trying to navigate this new world. Our clients range from small Amazon sellers to large corporations who sell on multiple selling platforms, to those selling digital services and software. Our intention in this webinar is to equip you with valuable insights and strategies to ensure compliance and optimize your business operations. Throughout our session, we'll explore key topics such as cross-border transactions, VAT, GST regulations, and best practices for managing tax obligations in various jurisdictions. Our expert speaker from One Stop VAT, Rūta, will share her expertise and practical advice to help you navigate the intricate maze of international sales tax compliance. So let's get right to it. Rūta, over to you.
Okay, hello. So once again, nice to see you all. Nice to meet all the attendees, at least virtually. So today, yes, as DJ has introduced, I'm going to talk more about taxes, how it works, especially in US market, in Europe, in UK, and in a broader view, in any other countries, if especially we talk about the sales of digital products. So here on the slide, you can see the main topics, what are we going to talk about. So in case you will see that you have any questions, so just raise them at once and in Q&A section. So after all my presentation, I will try to respond to all of them. Okay, so I guess we can just not to wait any longer, and we can start with the presentation. So let me share my slides. Okay, so first of all, before the start of going deeper to the taxes, I would like just to mention what is our company and what we are doing. So our company is like a startup still in European Union, the compliance startup. Currently, we are covering more than 100 countries. The focus and the main area of the clients is the e-commerce sellers. And this is like a mix of the clients who do the sales of physical products and with the digital products as well. And currently, we have more than 500 clients, so our expertise is quite high. We are facing with small and as well with the huge clients as well. So a lot of different cases are already solved. So the expertise is really high. So I guess what we can do, we can go further and start with a little bit of theory. What is that distance sales or remote sales? I guess the term remote sales is more frequently used in the US market, and distance sales, it is totally the same, but this term is used more in the European market. So what it is, theoretically, it is described as distance contracts between professional and a customer for the provision of a service or a good. The best example, of course, of distance sale is the shopping online. When you go www.com and you put some physical product to your basket, and you are buying the product, and that product reaches you, and you do not have to go physically to any shop to have a physical contact with the seller, and so on. The distance sales usually cover physical products and the digital goods. And if I'm talking about digital goods, what it is? Usually it is ebooks, images, downloadable movies, videos. Of course, as well, it covers cloud-based software, website hosting services. As well, in US market, you will see that it is more broadly described that SaaS services, it is software as a service. If I will say in a very simple words what it is, that digital products, it is something that you cannot touch, and something that you will download and have it on your computer or on your smartphone. Let's go deeper to the US market firstly. So as we all know, US has 50 different states. So, and all these different states have totally different regulations, totally different laws. If we say in the most simple way, you can treat these all 50 states as different 50 countries, because you can never say that, okay, in California, this works this way, this product is taxable this way, so it means that the same rule works in any other state. So you can never use that rule. Always, if you do expand your business to US market, so you have to know which states are you going to do your sales, in order to understand and to start analyzing the taxability, the rules, and the law. The consumption tax in US is named sales tax. So if you will try to find any information about how it works in US with the taxes and with indirect taxes especially, so you have to use the keyword sales tax. And from all these 50 states, only 4 do not have sales tax at all. So it means that you can do the sales to these states without any sales tax liabilities. US market has especially if you do start your sales to US market, you have to determine if you have any tax liabilities there. So you can do the testing for your company if you have a physical nexus and economic nexus. What does it mean, physical nexus, when we talk about the sales to US market? So if your business has the location in any state, establishment, branch, or you have an employee in any of the states, it doesn't matter what type of employee it is, if the employee is related with sales or it is like accountant, it doesn't matter. Or if you have your inventory in any of the states, in any fulfillment center, so it means that you have a physical nexus in that state. And what does it mean for you as a business? It means that you have sales tax liabilities at that state. So it means that without any threshold, you are liable to get registered there as a sales taxpayer and to start collecting sales taxes from your final customers. The economic nexus means that each and every business without physical presence in any of the state, as well have to track the amounts of sales they make to any of the states. Each state has set it the minimum threshold that company reaches, and then the liability of sales tax starts for that company. So the company constantly have to check the amount of sales to the states, to each and every state, and the amount of transactions to each and every state. Each state, as again, is totally different, so they have set it different thresholds. The thresholds vary from $100,000 sales to that state till 500,000 sales is to that state. And if we talk about the transaction amounts, so it is the maximum is 200 transactions. As well, if we talk about economic nexus, about the thresholds, there is a rule that the company have to reach at one of the thresholds, the revenue or the transactions, and some states have a rule that the company should reach both thresholds, the transactions and the revenue. And how, I guess, at once it raises a question, okay, there is a threshold, so how I have to calculate that threshold? What sales I have to include to that threshold? So each and every state has rules, what sales I have as a seller to include to that threshold. So part of these states use the rule that gross sales have to be included. So it means that all the sales, let's take an example. I do my sales to Georgia state. So I have to calculate all the sales I've made to that state. It doesn't matter if my product was exempt, if another product is taxable. So I have to include all the sales I've made to that state. Other states use the rule that only retail sales have to be included. So it means that if you do only B2B sales, only sales to the companies who resell your product, so it means that you do not have to include to the threshold calculations these sales. Only sales to final customers have to be included. And the rest of the states use the rule that only taxable sales, so it means only the products that are taxable have to be included. If we talk about what products are taxable, it is a lot of different rules in each and every state. So first of all, I guess before you are stepping into US market, what you have to do, you have to double check if your product is taxable. States actually have quite detailed explanations and rulings about the taxability, but if your product is not so straightforward, especially all these online products, digital products, are quite new, and the legislations are, published like 10 years ago. So it might be that the legislation does not cover your product. So keep in mind that you have to be really careful. And I guess the best case in that situation, if you do not find exact answer if the product is taxable, to directly raise the question to the state and request for the ruling. Okay, so if, let's say, your business has indicated that you have reached the thresholds in one or another state, what you have to do, you have to initiate the registration to get the sales tax permit. So how you can do that? You can apply for the sales tax registration by using streamlined sales tax registration system. What does it mean? That system covers 24 states. And by using that system, you can do the registrations in these 24 states at once. you do not have to go to separately to each 24 state and to apply for the sales tax permit. So you can do it at once with one application in that simplified system. But what does it mean for the seller? So this covers only the registration. Once the registration is done, so all the accounts and all the filing of the sales tax have to be covered in separate each state's system. Another way to get registered is to do the registrations directly with each and every state. And what benefits might be to use the streamlined sales tax system is that the registration is totally free. But if you do the registrations directly via the state, the sales tax permit will have a fee. The registration process takes usually around 15 days. I guess the main struggle with the registration, what I can say from my practice, especially when I talk about the companies who are not established in US and who that do not have address in US, is to get the letters with the confirmation numbers. As in the US, it works this way that the registration numbers are provided only by physical letters received by post. So for the companies outside US, usually receive these letters a bit later than these letters are received in US with US addresses. Sometimes it happens that the letters are not coming at all. So then it starts the problems, but of course everything can be solved. But the main struggle definitely with the registration in US is to get on time these postal letters. So my advice from my perspective would be, if you see that you are close to the threshold, to start the registration at least a month before, if you see that the threshold will be reached. So what information would be needed to do the registration? So definitely you will have to determine what is the date when you reach the threshold to that state where you are doing the registration. Then, of course, it will be asked the approximate amounts of sales to that state. As well, all the company's details will be needed, the address, the details of the owner, manager, the personal addresses of the directors as well. Of course, definitely all the states requires EIN code. This is employer identification number. Well, for non-US companies, it's easier to understand what that number means. This is like taxpayer number that covers all the states. This is like federal number that all the companies should have before they start registrations for sales tax. To get that number, it is not difficult for non-US companies, because it is possible to apply for that code via phone. And this is applicable only for non-US companies. And then what is needed is US bank account. Why it is so? Because it is impossible to make a payments in most of the states from the bank not based in US. Of course, it is a possibility to make a payment via credit card, but as well, some states accept only US banks' credit cards, and to pay by credit card, it has extra fee for the payments. It is around 1 or 2% on the total payable amount. And there is as well one state, District of Columbia, that requires additionally a document, the incorporation document of the company, or the articles of association document. Rest of the states do not require any additional documents from the company. The filing frequency depends on reported sales. So first of all, of course, the reporting frequency will be dedicated according to your provided approximate amount of sales once during the registration. And then according to your actual sales, the frequency might be changed as well. And these changes can be done at least once in a quarter. But of course, always the state informs officially before a month that you will have changes in your filing frequency. The deadlines as well differs in each and every state. It usually the deadline is 15th day after the reporting period end, or the last day of the reporting period end. So once you are registered as a sales taxpayer, you have to always double check what is the deadline for the filing, because if you are not doing the filing on time, of course the penalties will be applied. If we talk about the sales tax, the sales tax is complicated, especially because I guess you already know, but I have to mention that the tax is not like in California I have 2% or in Georgia I have 1% of sales tax. The sales tax in most of these states is the combined tax. So what does it mean? The sales tax will be combined from state tax rate, from county tax rate, from city tax rate, and from the district or any special tax rate. So it means that you will know what rate to apply to your sale only once you will know where your product will be delivered. Let's say where your final customer lives. So you as well, you can see here in my slide that there are two ways how the customer should be charged and what the sales tax should be applied. It can be used origin-based or destination-based principle. Each and every state has one of these collections. So what does it mean, destination-based? So it means that always once you do the remote sales to destination-based state, so it means that you always have to collect the exact location of where your product will be delivered. The sales tax rate will be calculated according to the location where the product is delivered. If the state is origin-based, so it means that the sales tax rate, once you do the sales in that exact state, will be always the same, where, let's say, your fulfillment center is. So let's say my fulfillment center is in California, in Los Angeles. So it means that the sales tax rate will be used from that city to any location in the California, the one rate will be used. Here you can see the breakdown, which states are working under origin-based collection system and which work under destination-based. So you can see from the table that there are much more states that use destination-based calculations. As well, it is worth to mention that for remote sellers who have, let's say, only a fulfillment center in California and all the sales are made from that fulfillment center, so all the sales will be taxed according to the place where the product will be delivered to any of the states, even to the ones who are listed into origin-based table part. As I have already mentioned, that it is very important to track the deadlines of the filings and of the payments, and to do it on time, because states applies the penalties and the interest once you are late. But what if you are late with the registration? There will be no penalty for late registration, but if any state will start the audit and it will be identified that your company has reached the threshold before you started collecting the tax. So you will be required to pay all the taxes from that backwards period. So if your business has indicated that you are late with the registration, you can use the VDA procedure. This is voluntarily agreement with the state, What does it mean? So it means that you can indicate to the state that you're late with the registration. You have had to pay the taxes to that state, but you are late. So the state will eliminate the penalties. So only the interest will be left for you to pay for the late filings and the payments. If we talk about the sales via marketplace and direct sales via your own shops, so if you are doing sales only via marketplace, so there is no problem for you to enter the US market because the marketplace covers all the sales tax liabilities. But if your business do the direct sales, or you have mixed activity, so it means that you have to deal with the sales tax on your own, and the marketplace will cover only the part that of the sales that are made via marketplace, and what is done directly, the seller, it is the seller's responsibility. Okay, so let's jump to European market, how it works here. So if the sellers starts the activity in EU market and in any country in European Union, the company will import the stock. So what does it mean? It means that the company has to have the registration before the stock is moved to European country, and there will be no VAT registration threshold for non-resident company. If the company business works this way, that if you are shipping, let's say, directly from Canada, the goods, that value is lower than 150 euros to final customers in European Union, you can use the simplified system named IOSS, and you can charge the clients as per VAT rate in the country of your final customer, and the goods will be moved directly to your customer, and the goods will not stop at the customs, and the customer will not have any additional costs to pay once receiving the product. As I mentioned, IOSS. So what it is, OSS and OSS, this is the simplified system in the European Union that helps to submit and collect taxes by using one system, not by registering in each and every country, but having only one registration in one European country. This is really helpful for all the remote sellers that do B2C sales in European market. I can see that I'm running out of my time, so I'm going to be quick here. OSS might have a few schemes, so it is Union OSS, non-Union OSS, and Import OSS. For the companies that are not established in European Union and doing sales of digital product, it will be applicable non-Union OSS scheme. If for the companies who import low-value goods, it will be applicable IOSS system. And if non-European company stores the goods in any country in Europe and do sales in European market, OSS scheme will be applicable. So how it works once the sales are made via marketplace in European market. So it also good news that marketplaces will cover all the VAT liabilities for B2C sales in European market. As well, if the sales are made via marketplace and the goods are low value and imported from outside EU as well, VAT liabilities are covered by marketplace. Unfortunately, if the seller is doing direct sales and the stock is stored in European Union, so it means all tax liabilities are going to be the seller's liabilities. If the company is non-resident, not established in European Union, so it means that there is no threshold for the sales to any European country. So here, to cover all the liabilities for B2C sales, of course, will be the best solution to be registered for OSS system. So how it works with the UK market. UK market, this will be the same rules as in European Union. What is a bit different, if we talk about the import of low value goods to final customers, here the threshold is £135. So if you sell the products with this value, so it means that you have a liability without any threshold to be registered in UK market and to tax your products at the moment of sale. And then the product with the special marking will come to UK market and without stopping at the customs, and the customer will have no extra tax liabilities once receiving the product. The same ruling for low value goods have as well Singapore. What is different? So that the threshold, of course, and that you have to evaluate not the consignment, but the separate product value. And there will be the threshold for the registration. So it means that before you reach the threshold of imported low value goods to Singapore, you do not have any VAT, or like in Singapore, it is the GST, no GST liabilities. The same regulations for low value goods import are applicable in Malaysia and in Norway. As you can see from the slide, the difference is only the value of the product, when you can treat the product as low value, and the threshold once you are applicable to get registered as a VAT payer. As well, additional countries who has the same rules, it is Australia and New Zealand as well. Okay, and quickly about the digital products. So how it works. So always digital products in most of the cases, in most of the countries, are taxable where the customer is, despite the fact if it is a business customer or if it is individual, the B2C customer. Currently, there are 103 countries that have implemented the regulation that non-resident digital products providers have to be registered as VAT or GST payers. So what does it mean for the companies who do sales of digital products all over the world? So it means that you have to constantly track the thresholds of each and every country that has a legislation that a non-resident company has to be registered as a VAT payer and to tax the digital products. Each and every country has different thresholds. Especially, you have to be careful with the countries that do not have thresholds at all. The examples of these countries, they can be Turkey, India, United Arab Emirates, and there are a lot of more. As well, in most of the cases, the thresholds are calculated by using the latest 12-month sales or the calendar year sales. So once in most of the cases, you have to calculate only B2C sales. Of course, as always, there are some exemptions, and such countries as Russia, Belarus, they have regulation that B2B and B2C sales have to be evaluated. Also, together with the VAT liabilities, in some of the countries, the companies will have additionally the corporate tax liabilities as well. So as an example, it will be the countries as Kenya, Taiwan, Nepal, Uganda as well. It is simplified systems. You can submit these taxes together with the VAT, but of course the difference is that the VAT is collected from your customers and the corporate tax is paid by a company and the tax is not collected from the customer. Of course, each country has a different registration process. In most of the countries, digital sellers have simplified rules, so the registrations are simplified, less documents are required, or even no documents are required. There are, of course, countries where the registration is made immediately. There are some that takes a week. And of course, as always, there are some countries that the registration process is really complicated. A lot of documents are required, notarized, translated to the local language, and the registration takes around a month. As an example, it can be Mexico. And of course, if you are late with registration, if you are late with filing or payments, the interest and the penalties are calculated. A lot of countries, as USA, has the VDA procedures. So if the company identifies that it is late with the registration, you can try to apply for this scheme in order to avoid paying huge amounts of penalties. And to finalize my speech, of course, I really invite you to sign up for our newsletter and to always and constantly receive the latest news about the taxes all over the world. And the special offer for all of you who are attending this webinar, by using the QR code, you can get the free registration. So the ones who are interested, I really encourage you to scan the QR and to use this opportunity. So this is it from my side. I guess I took a little bit longer, but I tried to cover everything that I wanted to say shortly, but everything that is really worth to mention. So thanks a lot for the attention, and I guess this is now the time for the questions. So the word to DJ.
Wow, thank you so much, Rūta. That was so much information. It really is. Taxes can be so complicated and overwhelming, and this is just a perfect example of how there's just so much that you need to know, which is why we partner with One Stop VAT. So when our clients are in need of, better understanding and help with the registrations, that we can put them with Rūta and get them compliant. I really appreciate that. Okay, I also want to introduce Julia. So Julia's been in the background. Thank you, Julia, for monitoring the chat. Is there any questions that came up during the webinar?
Yeah, yes. Hello, everyone. I've been in the background, as JJ said. There were a couple of questions that were both related to the US market. So the first one was from Christiane, and I might be easier to explain. Just if you wanted to, I can unmute you as well, Christiane. But the question was, I have a print on demand that prints and ships from there, so the US to Canada. Does that apply? I think that was when you were talking about the Nexus. Print on demand is owned by a Canadian company, and it's not mine. So what I'll do, I'll unmute you. Might be a bit easier to explain.
Hi, how are you today?
Hello.
Hi, good. I have an online boutique that does print on demand, and we use a software which is based in the United States, but it's a Canadian-owned company. And do have to register to taxes. So the address of the shipping is, when we ship something, it's their address where it's printed. And then I invoice the client, so we have to register to taxes in the United States.
You have to calculate the thresholds as as I understand, if I understand correctly, this is not like your fulfillment center. This is like the external company that prints the orders and the ships to the final customers.
Exactly.
So it means that you have to calculate and track the thresholds of your sales to the States. You do not, you are not applicable to physical nexus, but the economic nexus thresholds are applicable to your company. So you have to constantly track your sales, the amount of sales, especially the states that have the threshold for transactions. So because from our experience, the companies, it's easier to reach the transactions threshold than the turnover threshold.
Okay. Anyway, I just sent you an email because I want to go more in depth with that. So I just sent you an email. So that's perfect.
Yeah. Okay.
Okay.
There was another question earlier. Actually, there's a few that are rolling in now. One was about if a one-stop VAT can help eliminate the need for a US-based bank account.
Yes, it is possible. How we can help here and how we help currently for our clients. We are acting as an intermediary, so it means that we are doing the, let's say, the calculations. Then we issue the document like request for payment for the total amount of sales taxes that have to be paid in US. So your company transfers the money to our company, and then we do the payments from our bank account, from our US bank account.
Perfect, thank you. And feel free to anyone who might want to just speak up. If it's easier than typing it in, you can raise your hand as well, and then I can unmute you. There's a couple more that came in through the Q&A. One from Chris about Amazon sales. I sell via FBA only. Am I correct in what I have heard that by using only Amazon FBA that I will not have to register and collect the sales taxes as Amazon does that for me?
Yes, this is correct. And if you use as well, let's say Walmart as a marketplace or Etsy, let's say, so yes, so then marketplaces will cover the taxes. But if you do at least one direct sale to the States, so here you will not have any threshold in that states where your stock is stored in US by Amazon. So just be careful if your sales are mixed.
Perfect. Thanks, Rūta. And then one from Ella, and I see you have your hand up, so I will also unmute you. Go ahead. Well, you have the option to speak up if you're ready, Ella. Otherwise, there's a note here. If we sell on... Sorry, go ahead.
I was still on mute, sorry. So I'll continue the previous question with a follow-up question. So if you sell through Amazon B2C versus B2B, would that be a difference? Because I know in Europe there is, but is there a difference? Do we need to pay tax in the US?
No, in US there will be no difference. All the sales are covered with the taxes by marketplace.
Okay.
As in US, it is totally different legislation, and actually for the taxability there is no difference if the customer is business or it's final customer. The difference might be if the sale is to the reseller, but anyways, all that information is collected by Amazon, and Amazon covers all the tax liabilities.
Okay, and thank you so much for that clarification. And my actual question was, if we sell FBA, but we also sell FBM in the States, which means that we have a third-party warehouse in the States where we ship inventory, would we need to pay sales tax on that the same way we do in Europe, where we need to pay that when we import?
But still the sales are made only via marketplace, yes?
Yes, that's correct.
So in that case, there will be no liability for you to get registered for the sales tax because still the sales will be made via marketplace. But if you will do, again, any direct sale from that fulfillment center, so then, yes, of course, without any threshold, you will be liable for the sales tax registration and to collect the taxes. In Europe, it of course differently. If you store the goods, you have to be registered in that country as a VAT payer. And if you do sales via marketplace, again, marketplace collects the taxes. But if you do B2B sales, then the seller has to report that sales.
Okay, great. Thank you.
All right. Well, thank you everyone for all those questions. I'm sure everyone's head is sort of spinning. The session is being recorded, of course, and you'll all get a copy of it, of the slides and of the video. You can reach us at AIS at the information on the screen. You can also reach Rūta as well as her contact information. I think we have another slide for it. Oh, no, we do not. So you can also contact Rūta at, you'll have her information in the slides as well when you receive them after the webinar. So I really appreciate, I know we went a little bit over time, but I appreciate everybody sticking around and asking questions. And we hope to hear from you guys soon. Thanks, everyone.